Hello traders. Today we're talking about the FOMC, the Federal Open Market Committee. This is the body that sets U.S. monetary policy, deciding on interest rates and controlling the money supply. It is one of the most important parts of the U.S. Federal Reserve, the Fed, which is the central bank of the United States. Its goal is to maintain price stability, low inflation, and maximum employment. It also monitors risks to the financial system. Key functions: deciding interest rates. The FOMC determines the federal funds rate, the rate at which banks lend to each other overnight. Higher rates equals borrowing becomes expensive. Slows down inflation, but may reduce growth. Lower rates equals borrowing becomes cheaper. Stimulates the economy, but may cause inflation. Open market operations. The buying and selling of U.S. Treasury securities to adjust liquidity in the system. Buying bonds adds money into the economy. Selling bonds pulls money out of the economy. Forward guidance. The FOMC also gives statements, press conferences, and forecasts, which strongly affect global markets, stocks, Forex, gold, crypto, etc. Who's in the FOMC? 12 voting members. 7 members of the Federal Reserve Board of Governors, 5 of the 12 regional Federal Reserve Bank presidents, rotating basis, except New York Fed, which is permanent. Why traders care? FOMC meetings, held 8 times a year, can cause huge volatility in markets. Gold and Forex react sharply to interest rate decisions. Stocks and crypto react to Fed's outlook on growth and inflation. Example: if the Fed signals higher rates, the USD strengthens, and assets like gold often drop. In 2022, inflation in the U.S. was at its highest in 40 years, so the Federal Reserve raised interest rates again and again, reaching around 5%. This made loans and borrowing expensive, but it also attracted investors to the U.S. dollar, which became very strong. Because of this, gold prices dropped from about $2,050 to around $1,615, and U.S. stock markets like the S&P 500 also fell because companies faced higher costs. On the other hand, in 2020, during the COVID-19 pandemic, the Fed cut interest rates to almost zero to support the economy. This made the dollar weaker, but it helped gold prices rise above $2,000 and also push stocks higher after their big crash. These examples show that when rates go up, the dollar gets strong, but gold and stocks fall. And when rates go down, the dollar weakens, but gold and stocks usually rise.